Hello and welcome everyone. Welcome to another episode of my company health check series. So for those of you who have not watched my previous series or do not know what this is, remember to subscribe and check them out because here I will usually share my occasional updates of my portfolio companies I invested in and I'm still holding. And I will analyze them using the bottom-up approach, usually by looking at the quarterly reports all the way to the full year and beyond. I believe that by journaling my research in video format, I hope I can make myself more informed of my past decisions, whether it's right or wrong, and also share my insights with everyone here. Hopefully, all of us can benefit in some way, especially to fellow active value investors like myself. So without further ado, let's dive in to Kraft's latest quarter four and full year results. We look at Kraft's segmented revenue for quarter four 2023 first. The top three largest share of revenue for Kraft is Taste Elevation, Fast Fresh Meals, and the Easy Meals Made Better divisions. Kraft's Taste Elevation focused more on sauces and condiments, and this division performed modestly with a final quarter year-on-year growth of 9% and a quarter-on-quarter growth of 2%. The slight improvement in the quarter-on-quarter performance for sauces is probably due to the holiday season in November 2023 all the way to December. There seems to be continued growth traction in both the fast fresh meals and easy meals too in the final quarter, both year-on-year and quarter-on-quarter. Share of revenues for both of these segments have seemed to improve compared to the previous quarter and continues to show promising results. The improvement we saw in market share performance from Taste Elevation and Easy Meals was driven by action plans set at the beginning of the year, with execution of joint business plans with key customers to drive shelf space and quality merchandising, with a 1.5 percentage point share of shelf expansion versus the previous year, and also an increase in marketing investment, a full year spend of up 15% versus prior year, and ramped up innovation throughout the year, supported by a 15% increase in R&D, and all led to a lift in the performance for Taste Elevation and Easy Meals, the Easy Meals business segments. Overall, the revenue growth for all its segments in the final quarter grew 5% year-on-year and 4% quarter-on-quarter, which is quite decent. Here I have also put up a segment revenue by product category for comparison. As you can see at the bottom of the pic, we notice here that based on product category, there are four major segments that gives Kraft Heinz the largest revenue shares. The top contributor is sauces and condiments with their Taste Elevation portfolio, and number two is the cheese and dairy division coming in third, and ambient foods, which include canned products, coming in fourth, and the frozen and chilled foods, and so on and so forth. You can see that the gap is quite large here for revenue shares from the number one revenue generator versus the other top four contributors. However, the market share of its largest revenue generator, sauces and condiments, have remained the same compared to the last quarter at still 32%. The full year 2023 revenue growth represents only a small year-on-year growth of 0.5%, which I believe will likely stay flat this year in 2024. The estimated slowdown of 2024 will be due to the fact that there has been a trade accrual release from 2022 and from inventory deload year over year, creating a lapping effect. A concentration of emergency allotments at the end of 2022 on a year-over-year basis created a net benefit decline close to 40%, which is substantial, and that's what affected a lot of sellout. This decline should continue until the end of quarter one. So on a year-over-year basis, quarter one 2024 will still be about 20% less in SNAP benefits, also known as food stamps, compared to the last year, coupled with inflationary pressures, of which about comes from cost of labor and transportation. My estimates of the full year 2024 revenue growth will remain similar to 2023, despite Kraft Heinz winning market shares in certain segments of the market the last quarter. So over here, I put up Campbell's Soup segmented revenues as a comparison. Campbell's market cap is $12.5 billion as of today, while Kraft is now currently sitting at $42 billion. This current quarter, we see an overall decline in most of its segmented business if we compare quarter on quarter, with its largest revenue decline in beverages, while Kraft performed much better overall in terms of business segments on a quarter on quarter basis. Inventory turnover also declined from its previous quarter to only 2 times this quarter. Quarterly net profit margins have also declined slightly to about 8.79%. Free cash flow sits at $428 million the current quarter, which is much lower than that of Kraft Heinz, which I will show you Kraft Heinz free cash flow performance later in my video. This indicates that the entire industry as a whole seems to be facing a slowdown and squeeze in margins lately. With the management outlook, Kraft has just changed to its new CEO, Mr. Carlos Rivera, as previous CEO Mr. Miguel, who led Kraft Heinz since 2019, have stepped down in 1st January 2024. Management continues to make sure that Kraft brings value and leverage on the critical brands that the company already has. Strong brands like Heinz, like the Heinz business in the UK, for example, has made a number of improvements on the quality of the products and what the products itself has already strongly represent to the consumers. For example, a product like Heinz beans and the fact that it brings a benefit around protein, that's something that is now shifting in terms of how management think about the product. So in the Heinz baked beans category, management has created the HP baked beans category, where the HP brand provides for healthier and less sweet option with more fiber. And that allows marketing to actually experiment in a couple of different areas with consumers, both mainstream and more value-oriented customers alike. In places like Germany, for example, management have also introduced new benefits to consumers as they are also looking for value. For example, Kraft Heinz continues to bring in innovation, and consumers are looking for Heinz tomato ketchup with zero sugar instead. In 2024, management is expecting price approximately at a 1% level below expected inflation at 3%. So the main driver of gross margin expansion is really coming from efficiency drivers that management have put in place. Management gives an example of such initiatives coming from network optimization in the US, as Kraft Heinz have a very complex distribution center network of more than 80 distribution centers overall. Management have put in place initiatives in automation with very strong partnership with Microsoft by using technology to allow its network and teams to make faster decisions that improves labor usage and reduces yield on losses. By implementing high-value engineering, management will continue to make sure that they offer the right type of attributes to consumers and stakeholders alike going forward. Therefore, management expects organic net sales growth by about 0 to 2%, as they anticipate a positive price contribution throughout the year, with an inflection to positive volume growth in the second half of the year. Adjusted operating income is anticipated to grow about 2 to 4%. With this, adjusted gross profit margin is also expected to expand modestly between 25 to 75 basis points. For adjusted EPS, management expects a 1 to 3% growth versus the prior year. Management also highlighted a change in one of its profitability metric that's usually included in guidance. Throughout 2023, management provided guidance for adjusted EBITDA. Going forward, management will be providing guidance for adjusted operating income instead of EBITDA. This change is due to the rewiring within the organization for its KPIs and create a closer connection to total shareholder return and accountability. Berkshire Hathaway, for example, in its latest shareholder letter, also mentions the benefits of reporting on adjusted operating income instead of net income, as net income many times in terms of the Berkshire business includes unrealized profits and losses that fluctuate hugely from time to time. Therefore, operating income is more reflective of the true business and after depreciation and amortization charges. Now we look at the profit and loss account to date. I have tracked Kraft Heinz sales from 2006 all the way to its 12 months ended 2023. Historically, net profit margins for Kraft is mostly in the mid to high single-digit regions. During the financial crisis in 2009 to 2011, they still managed to maintain a high single-digit net profit margin. Also, during the COVID period of 2022, Kraft Heinz managed to pull in a net profit margin of 8.92%, which is still impressive if you compare this to its own average or median average. This will give Kraft Heinz an edge on its operations should all its strategies be executed successfully going forward. If we looked at this year's P&L, for example, or the 2023 P&L, you can see an impressive improvement in its net profit margins alone to date of 10.7% versus 8.9% in 2022. This might be due to the strategies and models put in place to gain efficiency to improve adjusted margins. This cost efficiency is also helping not only to offset the component of inflation, but it's also helping Kraft Heinz to expand gross margins and also allow Kraft Heinz to be able to invest a little more in the business, especially in the selling, general, and administrative side of things. Overall, the full year 2023 P&L seems to be pretty resilient in both the gross and net margins, improving compared to 2022. So as we look at the balance sheet, on the balance sheet side, Kraft Heinz debt position increased slightly by 1% compared to the previous year. Debt to equity, though, is still maintained with a similar structure compared to last year, currently standing at 40%. However, Kraft Heinz has a healthy times interest earned ratio of 6.9 times versus 5 times the previous year. Kraft's overall cost of debt across the entire portfolio remains at about 4.4%, and almost similar to the previous period. But do note that this remains quite high compared to industry standards. As a FMCG retail business, it is also important to look at how Kraft Heinz manages its inventory. I noted that Kraft Heinz inventory turnover for their finished goods improved to 7.3 times from 3.55 times for the year ended 2023. As we recall from our competitor analysis with Campbell, this still pales in comparison with Campbell and indicate a slightly slower inventory management as compared to its competitor Campbell Soup. Net ROA for Kraft Heinz this year improved slightly to 5.7% from just 3.8% the year before. Returns on invested capital for Kraft remains at a small 3.2% and only improved slightly from the last quarter. And Kraft Heinz earnings yield for my equity returns yielded 5.5% in the final quarter, which is still decent considering that this is a matured business and currently navigating in a challenging inflationary environment. Now we look at the cash flow. As I mentioned earlier, when we compared to Campbell's cash flow of around $400 million, Kraft recently generated approximately $2.9 billion worth of free cash flow, an improvement of 64 times compared to the previous quarter, or 15 times its current valuation. This is on the back of $1 billion worth of capital expenditure expense out, with an increase of $97 million in additional capex spent in the final quarter itself, 50% of which came from improving the company's digital systems in 2023. Capital expenditure to sales remains constant at a similar rate to the previous quarter at just 3.8 times. As management has mentioned, Kraft is expected to increase its capex spending at a similar growth rate in 2024. So now let's check out my valuations for Kraft. So Kraft Heinz current forward PE is around 18 times. Its median PE is around 20 times, while the industry PE is at 22 times. Based on my PE forward valuation metric, I increased Kraft Heinz share price slightly to be in the $35 to $41 range to reflect its optimistic but stable matured growth rate in 2024. My discounted cash flow or discounted earnings valuation sets Kraft Heinz price at a higher valuation of 18.4 to versus $17.2 previously. This is consistent with my earlier reasoning of cautiously optimistic improvements in operational value. And this is also a premium of 43% above the current price. Without major improvements for 2024, I believe that the share price will remain muted. It is important that the new CEO, Mr. Carlos, is able to execute his said plans well. We will have to give him some time and observe his performance again throughout the year. Based on my new grading system for companies that I review, I gave Kraft Heinz an overall grading of a C grade. Why? So what does an overall C grade mean for my expectations of Kraft Heinz? I would say that Kraft Heinz is well positioned to continue its growth trajectory into the near future as a defensive business. And at current prices, the value to me seems fair and sustainable. Should any near-term correction happen, I would instead purchase more of the stock. So this is all for my video, and I shall sign off here. Do remember to smash the subscribe button if you like what you watch. For the win, guys, and see you in my next video. Bye.